Pendle just hit #1 revenue on Ethereum with over $500,000 in a single day. While most DeFi tokens bled red this month, Pendle outperformed the entire sector by 15%. Arthur Hayes quietly accumulated over $1 million worth this week alone. And here's what nobody's talking about. Bloomberg just added Pendle to their Galaxy DeFi Index. That's institutional validation you can't fake. Today, I'm breaking down exactly what's happening on-chain, what the chart is telling us, and why my accumulation zone sits right where we are now. Pendle is trading around $2.70 after gaining over 20% in the past 7 days. For context, the broader DeFi sector barely moved. This outperformance is not random. It's driven by fundamentals that most traders haven't connected yet. Sentiment was deeply bearish just 2 weeks ago when price touched the $2 psychological support. But something shifted. Whale wallets started accumulating. Protocol metrics started printing record numbers, and suddenly this boring yield protocol became the best performing DeFi token across the entire ecosystem. The timing here matters because we're approaching a critical technical inflection point, and the fundamentals just caught up. Let me walk you through what's been unfolding. On November 24th, Pendle was officially added to the Bloomberg Galaxy DeFi Index at 2.3% weighting. This isn't some crypto-native metric. Bloomberg is traditional finance, recognizing Pendle as legitimate DeFi infrastructure. The team even had to post the actual PDF because people thought it was fake. That's the level of surprise here. But the on-chain data tells an even bigger story. Pendle generated the highest 24-hour revenue on Ethereum at $510,000, beating Sky Protocol and EtherFi. This comes from real usage, 5% fees from yield accrued plus 80% of trading fees. Real yield, real dominance, real revenue. Then there's Arthur Hayes. On-chain trackers show his wallet accumulated over $1 million in Pendle this week. 2 weeks ago, he sold at a loss. Now, he's buying back aggressively. When the former BitMEX CEO reverses course this quickly, that signals something changed in his thesis. The bigger picture here is Boros, Pendle's new platform for trading funding rates. This targets a $150 billion daily derivatives market that was previously untouchable on-chain. Boros already integrated with Hyperliquid and processes millions in volume. The total addressable market for Pendle is not just DeFi yield anymore. It's the entire global interest rate derivative space. Term deposits, mortgages, bonds, everything in finance has yield, and Pendle wants to tokenize all of it. For those looking to understand how yield strategies work across different platforms, I've compiled everything in my DeFi guide available in the pinned comment for just $4.99. Now, let's get into what the chart shows us. Looking at the weekly timeframe, Pendle sits at a critical structural level. Current price around $2.70 places us right at the major support zone between $2 and $2.30 that's been tested multiple times. July 2024, March this year, and now November. That's confluence you want to see when building a position. Price remains below all major exponential moving averages. The 10 and 21 EMAs hover above, with the 55 and 100 EMAs stacked higher still. This typically looks bearish, but here's where it gets interesting. There's a descending trend line from the August local top that's been respected, with clear rejections in September and October. We're compressing into the apex of this structure. Now look at the volume profile. The point of control sits at 320. That's where the most volume traded historically. When price trades below point of control, it acts like a magnet pulling price upward. The Heikinashi RSI is the real signal here. Notice those white circles on the chart. Every time RSI reached these oversold levels and curled upward over the past 2 years, significant bounces followed. We're seeing that same curl now. Fibonacci levels tell the story for targets. Anchoring from the December high at $7 down to the March low at $180, the 236 retracement sits at $310, almost perfectly aligned with that volume point of control. The 0.5 retracement at $450 and the 618 at $5 represent the next major resistance clusters. For my position, here's my thinking. The load zone sits between $2 and $3. I'm already accumulating within this range. Stop loss invalidation comes on a weekly close below $195. If that breaks, structure changes and I would look for re-entry around $120. Trailing stops adjust as targets hit. After the first target, stop moves to entry. After the second, stop moves to first target, and so on. Take profit targets follow the Fibonacci structure. First exit at $380. Second at $5. Third at $7 reclaiming the December high. Fourth at $10.50. The moonbag rides to $15 at the 2618 extension if this plays out fully. The bull case is straightforward. Bloomberg validation, record revenue, whale accumulation, and Boros expansion could push Pendle to retest prior highs above $7. The bear case requires a weekly close below 195, which shifts the structure entirely. And what changes my thesis? Sustained closes below the $2 support or a broader DeFi sector breakdown. But institutional interest doesn't lie, and the smart money is positioning now, not waiting. Pendle offers one of the cleaner risk-reward setups in DeFi right now: real revenue, institutional recognition, and a chart coiling for resolution. The market hasn't priced in what Boros represents for the protocol's total addressable market. If this thesis resonates, hit like and subscribe. Join my free Telegram for faster daily setups, links pinned. I covered yield strategies in my recent videos. Check those breakdowns on screen for more setups like this one. Thanks for watching, never financial advice, and I'll see you tomorrow in the next one.